Hi, and welcome to the Stock Scores Market Minutes for June 18th, 2018. This week's topic, be patient for the proof, and then, of course, my regular weekly market analysis and a recap of the trade of the week on SRRA. As traders, we are aiming to predict the future and not recap the past. It's important to make that distinction because oftentimes traders are too focused on what has happened in the past. Our analysis should really be focused on what will happen next. The problem is that human nature looks for some proof to justify the decision. If we buy, we want to see the stock move up to tell us we are right. Well, oftentimes that proof may take time, and therefore it's important that we only reverse a decision when there is strong evidence, call it counter evidence, that we are wrong. Otherwise, we need to stick with the trade. Now let me show you how this played out with a day trade on the Friday. Not really a day trade, but all of the day trades on Friday. Coming into the open, the market was gapping down, and I think there was a little bit of panic setting in at the open. My sense was that the market probably would bounce early and end up closing above the high, and so rather than look for selling opportunities or short selling opportunities, I felt it better to look for buying opportunities. Well, the market did do that. It did gap down and it went lower for a little while, and then by the end of the day it had moved up. Well, I have to tell you that at this point here, it was a little bit hard to think that I was right because the market wasn't proving it. It only came when this rising bottom built, and then another rising bottom built, and then finally my analysis proved correct at the end of the day. So sometimes you just have to give it a little bit of time. There wasn't real strong counter proof, and therefore I had to stick with my outlook for the day. All right, moving along to the weekly market analysis. First of all, the 30-day 60-minute chart of the S&P 500. You can see there is the uptrend, and although we had that weakness on Friday, we did not break the upward trend line, and we managed to come back and close above the open. So the trend remains up and bullish, although we are stalling under this resistance level, and we'll need to break through that 279.5, 280 zone to make the next leg higher. Looking at the longer term weekly chart, you can see that we broke the downward trend line right there. We've been moving up ever since. Right now we are stalling at that resistance zone from the highs there, and once we break that, we should move up toward the highs there, and then we'll probably get stuck as well. So we're slowly bringing or taking back the lost ground from the correction that occurred back in February when the market went parabolic and then corrected downward. On to the Russell 2000, which has been one of the top performing areas of late, the small cap stocks. I would say they've been a little bit too strong. There is our upward trend line, and you can see that we have run away from the trend line. We're at the top of that trend line or that channel, and therefore probably getting to the point where the market's getting a little bit overbought. There's still no sign of weakness here, but there will come a point when the sellers will start to take profit in the small caps. Given, though, that the trend is up, we should stay long-term bullish on the small caps. Looking at the Canadian market, we've had a nice upward move there. We are now hitting resistance, and just as you would expect, the market hits that price peak and it gets stuck, and now we may threaten this little upward trend line. Keep in mind this is quite a short-term chart, 30-day 60-minute, but it wouldn't surprise me if we pull back a little bit and then make another attempt at breaking through that resistance level. So this is a neutral chart because we are bumping up against that resistance. Longer term, kind of a similar situation in that the market is bumping up against resistance. You can see that we've had this upward move and we're now stalling there. We ultimately need to break out through that, but I think it's going to take some time if it happens at all. Moving along to the TSX Venture, it is pessimistic. You can see the tops are falling, so the microcap stocks in Canada look generally weak. We are now moving down through support, and therefore looks like it will be lower prices ahead for this market in general. Not too surprising given the weakness that we saw in gold and oil last week, which I'll show in a moment, because those stocks have a heavy weighting on this market. U.S. Treasuries holding support still and managed to close the week above the open, so it's trying to hold that support. We still need to start to move up off of support and come back toward that longer term resistance line. But if that happens, if we move up, then interest rates are going down. And if we ultimately break down through this support zone, then interest rates are going higher. Onto the US dollar, which had stalled from its recent strength at resistance. We had a couple of weeks of stall there, but we had a big move on Friday to the upside, and that looks like it should now resolve with a furtherance of the upward trend, which started a few months ago. We'll see. It needs to get through the highs of 2 weeks ago, right there. If that can happen, I think the US dollar continues higher. And that has had an effect on gold, which had some weakness on Friday as the US dollar rallied. Of course, if the US dollar goes up, then it makes gold and oil and all commodities really more expensive. And that's why it's not a huge surprise that gold broke down. I think gold is headed toward this next area of support, and I would be cautious with gold and gold stocks. Similar situation in oil, although oil has been in an upward trend. But now we are breaking down through the trend line from a falling top on the daily. That points to probably weaker prices ahead. Maybe not dramatically weaker. We may just get down to this support zone, but I think a little bit of caution warranted with oil, especially if the US dollar continues to rise. Looking at the fear chart, fear is falling, and we are breaking down through floors, and therefore looks likely that fear will continue to fall. We get these little brief spikes higher, but until we get a sustained upward trend, I wouldn't get too worried about the fear factor in the market. All right, so my outlook then, US stocks bullish on both time frames, Canadian stocks neutral on both time frames. Gold, I'm going to put a bearish rating on both time frames, and oil neutral long term, but we are flirting with that long-term upward trend, so we got to be careful there, but bearish short term because of that breakdown from a falling top. Strength in the US dollar caused problems for commodities, which sold off sharply Friday, and that caution should be warranted with oil and gold. US stocks rebounded from early weakness on Friday and remain in that bullish trend. Canadian stocks stalling at resistance but are stable, and fear slowly drifting lower despite the headlines. On to the trade of the week, and this is a bit of a frustrating trade. So I bought this right here, and because the stock was moving up nicely in terms of risk-reward terms, I had put in a hard stop somewhere down in here. Well, the weakness on Friday caused the market to have some selling pressure just in the opening hour, taking out that stop, but the stock ended up coming back to close up and above its open. So the lesson here is that sometimes that stop on close rule is better than a hard stop. What is stop on close? It means that I will exit a stock if it closes below support. Now, I didn't do that on SRRA. I had a hard stop. The stock got triggered on that stop. The exit got triggered on that stop on Friday with some weakness because of a little air pocket in the market, lack of liquidity, that sort of thing. And those are the frustrating trades. And oftentimes, I think it's best to use that stop on close. I didn't use it here and paid the price because the stock still looks pretty good. I think it gets back to the highs. Not a whole lot more upside, but it should get up to that level before it gets stuck. Well, that has been the Stock Scores Market Minutes for June 18th, 2018. Please hit that subscribe button, the like button, the comments, whatever you like to do, do it now. Have a great week in the market and trade well.